Welcome back to another video by myself, and in this video we're going to talk about all things related to Geelong, and really this video is more specifically about an update on the Geelong market and whether or not you should consider the Geelong market as your next investment location. And for those of you who don't know, I did a video on Geelong about 6 months ago, 6 or 7 months ago from memory, where I really said that Geelong wasn't in the right position to invest, and at that point that was correct. It really wasn't. The yields were shocking. There was no price activity happening. It really was not the right time to invest. However, 6 months onwards, with the whole of Melbourne starting to show some promise and the rest of regional Victoria showing promise, Geelong is starting to look better every single month. And just before I go into that, if you have not purchased the property blueprint, then you're only shooting yourself in the foot. This course has a wealth of information and will take you from a novice investor to a very profound, intelligent investor. There's over 200 plus members as well, which you'll have access to in the private community. And there's over 8 in-depth modules plus 6+ hours of content and over 60+ videos for the price of $4.99. And you get 6 months into the private community, which is worth over $200. So you need to purchase the course. You need to educate yourself to become a better investor so you can understand how to invest in property, where to invest in property, and how to make the right decisions. And you'll have me and the community to guide you into your next investment property. So don't wait any longer. Get the program, get yourself educated, and make smart decisions in life. All right, but let's get into the video. Now, I'm going to go through some suburbs that the community has been investing in and the community has been looking at for the past couple of months. And if you don't know, I use HTAG for my research, and I do have a referral code, so use that when you're using HTAG to make sure you get 25% off. Don't waste money. And one of the locations I'm looking at is Corio. And the first time I made my Geelong video, I completely butchered the name. But in Corio, we are actually starting to see promise. It is one of the most affordable markets in Geelong. It is a lower socioeconomic area, but we are seeing the first signs of price growth. The last quarter has risen almost by 1%, and the month change is looking positive, which are good early signs for us as an investor. The rents have been going up around 4%, which is pretty good, and the yields have leveled out. Now, fundamentally, like I said, it's a lower socioeconomic area. The renter to owner occupier ratio isn't the best, and the affordability is not the best. In most regional areas, I like to see affordability under 35 years. However, the prices in terms for investors are still very affordable. And we're actually seeing stock reduce every single month for the past couple of months, and the demand is starting to increase where properties are being sold in about a month. So the market really is picking up in this location in Corio, and the vacancy rate is also in an acceptable level of under 2%. And so you really do say that Corio is still very early in its investing phase, right? Corio and Geelong is still very early. However, unlike 6 months ago, we are actually starting to see positive price movement, positive trends in days on market, in supply, in demand. And this is what we want to see as an investor and gives us more confidence to think about a location to invest into. And it's still very counter-cyclical. Not many people are talking about this location. There's not much interest in it at the moment. However, we are starting to see a little bit pick up. Not only that, when we have a look at St. Albans Park, which is another location that is starting to pick up, we've noticed on the ground and in the data as well. Remember, data lags, and as the months go on, we'll start to see more positive price movement. In the past month, we're starting to see a little bit positive. The yields have been rising, and St. Albans Park is a nicer part of Geelong. Not the nicest part by any means, but it is a nicer part of Geelong down here, right? And this is another location you can start to look at, start to consider. Affordability is still very good in this suburb, under 35 years. Stock on market is incredibly low, and it's getting lower by the day and lower by the month. Days on market, I feel like it's a bit skewed, to be honest, on the HTAG data. I'm at 83 days. I do find it's getting sold quicker and quicker. Some properties are being sold within the week from what I've heard from agents, and vacancies are incredibly low. So as a location, St. Albans Park is another one you can put on your list to consider. We also have Newcomb, which is very close to St. Albans Park and also bordering Whittington as well. I butchered that name, I know, I'm sorry. But here we are also starting to see a little bit more positive trends. Yes, there's no positive price growth so far in the month data or the quarter data, but it will start to look more promising as we look down. Affordability close to 35 years, not the best terms and fundamentals of socioeconomics economics or renter to owner occupier ratio, but the stock on market and the days on market trends are getting better every single month. Less stock is coming on, demand is rising. That's what we want to see. The vacancy rate is, yes, high, but you want to just do your due diligence with the local property manager and confirm, is it really that bad? You generally find it won't be, but do your due diligence, of course, in that area. Now, of course, what I do want to stress though is that these are just some of the select suburbs that we are looking at and that we are looking to invest in, because it's still a very early counter-cyclical market in Geelong. Now, once this market becomes hot, suburbs like Corio, Norah Lane, Whittington, East Geelong, Bellpost Hills, St Albans Park, all of these suburbs neighbouring each other will also rise in value, because that's what usually happens. A few select suburbs in a regional location will grow in value, and then once the market becomes hot, more demand comes in, supply will reduce in all the other suburbs as well, and then we'll see the whole area lift up in price. All that being said, there are obviously still some issues. And just before I get into that, if you have not already, make sure you join the private community. We have over 250 members helping each other out. These members were already ahead of the rest of the other investors out there, other BAs out there, and we were already looking at Geelong a couple of months ago, talking about the location, talking about the potential it has, the upside it has if you enter the market early, enter the market counter-cyclically. So if you weren't part of the private community, you missed out. So if you're feeling lost, confused, unsure where to buy next, join the private community. If you need guided mentorship, join the private community. If you want to be a part of a network of team of investors who are smart, educated, and thoughtful, join the private community. And just to show you what that looks like, we talk about different locations every single day. We have a finance channel, so you can ask a mortgage broker about what the questions are relating to your finance and lending. We go through different property deals. We talk about renovations and repairs. We also have weekly community calls, and we talk about different locations in every single state every single day. So if you aren't part of the private community, you are missing out. Join now. It's $35 a month, an absolute steal of a price when you're talking about securing $1 million, $500,000 property. I've made a very similar video about this before, but the Geelong buying window is also very small. And the reason for this is yields are still shocking. 4.5% yield, 4.2% yields, under 4% yield, right? These yields aren't great. So if there's any time you want to invest into Geelong, you want to do it early. You want to do it counter-cyclically, and you want to do it before anyone is there as well. Because once these prices start to rise, and we're already starting to see some of the yields start to compress, it will become holding property in Geelong harder. For example, this property in Corio is around $490 to $540, $530 for example, and similar properties are renting around $450 to $420 to $470 to $500. I've just put here $450. And generally speaking, you're going to be about negative $1,300 in cash flow before any tax deductions, as well as yearly around negative $14,000. But once these prices start increasing, for example, to $550, $600,000, your net cash flow is going to look worse and worse. Yes, interest rates will drop. It'll make cash flow holding easier. But if you can already start off on a 4 to 4.5% yield, you're just putting yourself just that little bit ahead, and you're helping your own serviceability, and you're also helping your future borrowing capacity. So if you are a shrewd investor, it's generally better to enter the market just that little bit earlier, and being able to hold the property is important, and get in before the prices start rising. And by the way, if you want to see the full breakdown of Geelong's economy, it is very diverse. I have no issues from that end. It's a great medium to long-term hold in Geelong. It's very close to Melbourne, and I have no issues from that front. So you really shouldn't be too concerned. But right now, that is the sort of update on the Geelong market. And I want to stress, it is still early. We're only just seeing some positive signs. It is not a hot market, but it's not a cool market either. It's turning from a cool to warm market. There are good positive signs. There are good properties available for you. And right now, I have a little bit more confidence of the backing of data as to consider this location. And I'm just letting you guys know because you wanted an update on the Geelong market, and I hope this has helped you. So do two things. Join the property community and get yourself educated with the Property Blueprint course, and go buy in the right locations. And if you need mentorship and guidance, I am here to help you. Till next time, thank you.